What's going on, guys? Hope you're doing well. Really quick today, I wanted to talk about how Moody's has finally upgraded Tesla to investment grade. It's been a long time coming. Most folks kind of saw this coming at some point after the S&P upgraded Tesla back in October of last year, I think it was. And so Moody's always kind of follows suit after whatever S&P decides to do. But I think personally they're 1 to 2 years late to the party. Tesla has consistently shown quarter after quarter over the last few quarters, at least a year to year and a half, 2 years of solid, consistent fiscal soundness, constantly beating not only expectations, beating records, continuing to perform efficiently, effectively, and reducing costs at the same time. So all the chips were essentially falling where they needed to be for Tesla to be upgraded. I still think a Baa3 rating is too low, but really in the grand scheme of things, I don't think this really means much for retail investors like myself, but other organizations, other investment funds, retirement funds, they might kind of be sitting on the sidelines waiting for a criteria in which Tesla is rated investment grade by the main credit rating agencies before they actually can invest a portion of their fund into Tesla. So anyway, like I said, long overdue, but better late than never. So I'll just read a couple of the highlights that I wanted to point out. Green really means that, I generally agree with it. Red, don't necessarily agree. And then yellow is kind of neither here nor there. Moody's assigned Baa3 long-term issuer rating to Tesla, and they see that the outlook is stable for Tesla. So the rating reflects Moody's expectation that Tesla will remain one of the foremost manufacturers of battery electric vehicles with an expanding global presence, very high profitability. The upgrade also incorporates government considerations, including Tesla's prudent financial policy and management's operational track record. So finally, they're recognizing the track record that Tesla has had for at least 2 years now. So the Baa3 long-term issuer rating reflects Moody's view that Tesla will maintain its position as one of the leading manufacturers of battery electric vehicles as the company further solidifies its global footprint. Moody's anticipates that Tesla will deliver about 1.8 million vehicles in 2023. So really they're just reiterating what Tesla and Elon stated in the Q4 earnings call, in which they're estimating about a 1.8 million delivery mark. Most folks, including myself, think that they might be sandbagging a little bit, but considering all the force majeure events that have occurred over the last 12 to 24 to 36 months, I think it's prudent that Tesla is kind of playing it safe to some extent. So I believe they get closer to the 2 million mark, but 1.8, pretty sound estimate. So that would be about a 34% increase compared to the 1.3 million that they delivered in 2022. And nearly double what they delivered in 2021. Considerable investments in new vehicle and battery cell production facilities enable a steep increase in vehicle deliveries. Tesla's product offering is expanding with an early production of the Cybertruck slated for later this year and the development of the next-gen vehicle at a targeted 50% cost reduction. That way they can rely even less on the Model Y and the Model 3 earnings. Tesla's growing scale, regional production facilities, and heightened focus on efficiency of its manufacturing processes support an EBITDA margin that Moody's expects should be roughly 15.8% in 2023. The margin compression is relative to an industry-leading 18.9% EBITDA margin. And here's where I kind of disagree with their statement, but they say that last year's drop in Tesla's vehicle prices amid more competitive offerings of battery electric vehicles from other automakers, changes in tax credits across geographies, and concerns about vehicle affordability. So I don't necessarily agree with the more competitive offerings from other EV makers. I think they still have a long way to go. That's a whole separate video that we might get into at some point, but I think it's pretty easy to see that when you look pretty much at every corner you turn these days, there's at least one Tesla going down the street. I rarely see as many Rivians, I rarely see as many Audi e-trons, as many Volkswagens, whatever it might be. Usually, pretty much every corner I turn, there's a Tesla going down the street. So Moody's expects Tesla's financial policy to remain prudent. Financial leverage is well below 1 time after Tesla repaid about $10 billion of debt in the last 3 years. So again, Tesla practically have no long-term debt. If anything, compared to other automakers like your GMs and Fords, who have hundreds of billions of debt and still have to build new factories to transition their fleet over to being fully electric or at least partially electric. And yet they've had investment grade for who knows how long by now. I have no idea. But still, it's kind of crazy to think about that. Tesla has been prudent with their balance sheet, and yet it takes this long for them to get investment grade when other companies, and not just legacy OEMs, but just other companies that might not be as fiscally sound, are even better than this, Baa3 rating. So I don't know what kind of bureaucratic issues might be going on there, but it is what it is. Okay, the stable outlook reflects Moody's expectation that Tesla will continue to capitalize on robust growth and global demand for battery electric vehicles, but an increasingly competitive environment. I'll go ahead and give it to them. Sure, literally anybody could release one car, and that one car will take market share away from Tesla, albeit a fraction of a percent. But it's very interesting that they're pointing out an increasingly competitive environment. Let's circle back in about 3 years and see how other automakers have mass-produced EVs at scale at a relatively affordable price point. Let's circle back in 3 years and see if this is actually the case. Moody's anticipates that liquidity will remain very good, underpinned by a very sizable and growing balance of cash and investments. So obviously, this past quarter, Tesla, I think it was about $20 billion that they have in cash right now, cash and cash equivalents. So pretty solid balance sheet, good amount of cash, low amount of long-term debt. So they're in pretty solid footing. So factors that could lead to either an upgrade or a downgrade in the ratings. The rating could be upgraded if Tesla maintains a strong competitive global presence, which, let's be real, they will, and offer an increasing number of battery electric vehicle models. So I really don't think they need to do this. I think a lot of folks have kind of compared Tesla to kind of Apple, in which Apple doesn't have like 52 different iPhone variants. They just have a few, and yet they're doing pretty darn well. So I think as long as you have a compelling vehicle that addresses, for the most part, people's needs, i.e. an SUV, i.e. a sedan, a truck at some point, i.e. Cybertruck, maybe a van at some point. I think for the most part, you're pretty well covered. What could downgrade Tesla is if the models materially soften amid an expanding offering by other battery electric vehicles. So again, I don't agree with this, but I think they're just kind of covering all their bases here. Again, super long time coming. I mean, if anything, I think Tesla should have the highest credit rating that a company can get, considering their strong fiscal policy. So for a retail investor like myself, it doesn't really matter too much. But I think for other funds, other firms that might be waiting on the sidelines to get into Tesla, now they might be meeting the criteria necessary to be able to allocate some funds to Tesla as a long-term holding. So anyway, guys, I think that's pretty much it. Just wanted to give an update on that. I'm super stoked that finally the street is starting to wake up to what kind of company Tesla is. As long as Tesla continues to execute, it doesn't matter really if, it's just a matter of when Tesla gets to their target of 20 million vehicles, in which hopefully they can start to really make a good dent in the global fleet of ICE vehicles. Anyway, thank you guys so much for watching. Currently on the side, I'm kind of working on other projects where I kind of dive into like the different aspects of what really differentiates Tesla. Now that I've started this channel and I'm a few videos in, I'm really starting to kind of enjoy the workflow. I'm still kind of working on figuring out how to best and most effectively allocate my time. I work full time. I have a 1-year-old daughter, so for the most part, I kind of try to do this on my spare time whenever I can get a few minutes here and there, and then probably late nights as well. So right now it's pretty late here as I'm recording this, but it's really the only time I have to actually spend some time on this. But anyway, it's kind of become a hobby of mine, so hopefully I can slowly but surely continue to improve as each video goes on. But anyway, going back to what I was saying earlier, I have a multi-part series that I'm working on in which I dive into the different aspects of what differentiates Tesla and effectively what kind of puts it in a league of its own, in which it really has no competition. There isn't like a one competitor that really goes head to head on every sort of strength that Tesla has. And so that's one of the things that I kind of want to dive into slowly but surely. So stay tuned for that. It probably won't come tomorrow or the next day. It's kind of something that I'm building towards. So stay tuned for that. But again, For those of you that have kind of been watching my videos early on in this channel, I really appreciate your time. And yeah, hopefully I can keep you around and catch you guys on the next one. So thanks for watching.